here's the question we're going to do, which is exercise 11-13 for a flexible budget. And what I've done is I've taken this information and I've copied it over here so that it will be very simple for us to create a flexible budget. So we have a master budget. We know what a master budget is because we already did budgeting. So a master budget is at one level of activity. So for instance, I might create a master budget for 2,000 units. And my master budget sits at that 2,000 units. If I, during the year, make 2,100 units, I can't compare my 2,100 units against the 2,000 master budget because the master budget is set for 2,000 units and I've created 2,100 units in the year. So therefore, I have to create a flexible budget where I change the number of units, but I keep my standard costs the same. Standard costs are the standards that we set so that we can control our costs. So we take the standard costs. Keep in mind, we've done master budgeting. So we have a master budget, and the master budget is at one level of production. And I'm going to put in brackets, activity. So it's one level of activity. So a flexible budget, it uses the same standards as the master budget, but at a different level of activity. There's two reasons why we create a flexible budget. We create a flexible budget so we can do variance analysis at the same level of activity, the same level of production. So if I actually produce 2,100, I'm going to create a flexible budget at 2,100 so I can do a comparison between the two. So that's one reason. Second reason is I might produce a flexible budget at different levels of activity to say, well, if in the upcoming year we create this many, we produce this many, this is what my operating income will look like. And if I produce this many, this is what my operating income will look like. So flexible budget can be used to create a flexible budget to compare to actuals, or to create a bunch of flexible budgets so we can judge when we move forward how will operating income change as the level of activity changes. And all of these budgets use standard costs. So in this question, you can see that they've budgeted these amounts for the years. So these are the standard costs. And I've transferred them up here. It says right here, 2 leather straps, $7 each. Labor is 1.5 hours at $18. So I've just copied it all here. And then it says, prepare the flexible budget for 3,500 units, 4,000 units, and 4,500 units. So that's what we're going to do. 3,500, and this is units. We're also going to do it at 4,000 units and 4,500 units. And what we're going to do is we're going to calculate the costs as each of these levels of activity. I want to start with my direct materials. And what I'm going to do is I'm going to take my number of units, and I'm going to freeze that, and I'm going to multiply it by the fact that I need 2 leather straps, and each of those leather straps is going to cost me $7. So if I do this calculation, it will calculate exactly what the total cost of direct materials is for 3,500 units using standard quantity of 2, standard cost of 7. So you can see it's $49,000. Now, I can do the same for direct labor. I'm going to copy this down. Let's see if it worked. I'm taking 3,500 units multiplied by the labor hours, 1.5 hours, and $18 per hour. So my direct labor at 3,500 units costs $94,500. I can also do the variable overhead. Remember, variable overhead varies, changes with the level of activity. So with variable overhead, I'm still going to do the same thing I did previously. So I'm going to copy it down. So it says it's 1.5 hours, $1.20 per hour, and it's 3,500 units. There we go. It's $6,300. And then I have my fixed overhead, but my fixed overhead is fixed at all levels of activity. So I'm just going to take my fixed overhead right here. I'm just going to plug it in. By doing this, I can now add this up. Oop, not with the 3,500 because that's units. I can add this up and it will tell me what the total cost is at this level of production. And we can see it's $156,600. So now, remember flexible budget. What's the value of this? I can show the impact on either operating income or in this case, costs, because I only have cost information. I'm going to do the same thing here. I'm going to take the 4,000. I'm going to freeze it. I'm going to multiply it by the 2, same standard quantity, and the $7, same standard cost. And you'll notice that if I'm producing 4,000 units, my direct material costs are going to jump up to 56,000. Why? Because direct material costs vary directly with the level of activity. If the level of activity goes up, the direct material cost goes up. If the level of activity goes up, the labor costs go up. If the level of activity goes up, the variable overhead goes up. So I can again just copy these down, all three. I'm just going to expand that. There we go. I can copy these down. There's all my costs. And you'll notice I'm doing the same kind of thing as I did before. These standard per unit, they don't change. What changes is what I multiply them against. Now, fixed overhead doesn't change with the level of activity. So I'm going to use this fixed overhead that I already used previously. So notice it's not changing because it doesn't change with the level of activity. So again, I'm going to add it all up. I'm just going to pull it across. Total costs go up to $178,000 in total if I make 4,000 units. And again, I can do this. I'm going to freeze this. I'm going to multiply it by 2, multiply it by 7. And you'll notice I'm doing the same thing that I did before. I'm going to pull it all down. It's doing the correct calculations automatically. And then here, I'm going to take the fixed costs exactly the way they are. They don't change, not within the relevant range. And so here we go. We're just going to add it up. And there it is, 199,400. You can see right away that there is a change in the total cost. The change in the total cost is not because the fixed costs change. It's because all the variable costs change as the level of activity changes. And that's the definition of a variable cost. So these are 3 flexible budgets. And we can see the change in the total cost as the level of activity changes. Now, it says conceptual connection. Calculate the unit cost at 3,500, 4,000, and 4,500. I'm going to say total variable costs because I want to demonstrate something. So I'm going to do the total variable cost, which is the direct material, direct labor, variable overhead. So I'm going to do the total variable cost. Now I'm going to do the per unit variable costs. And we're going to divide it. There we go, $42.80. Now here's a question. If I pull this over and I calculate it for 4,000, 4,500, will it change? Yes or no? And the answer would be? The answer is going to be no. See? Because variable costs per unit don't change within the relevant range. Because we took this, and then we took this, and we took this, and we simply multiplied it by the units. However, the per unit fixed costs are definitely going to change because I'm going to take the fixed cost and I'm going to divide it by the number of units. There we go. $1.94. As the number of units goes up, the fixed cost per unit is going to go down. $1.70, $1.51. The total per unit cost is these two things added together. So we can see that the total per unit cost is changing, and it's changing not because of the per unit variable cost, it's changing because of the per unit fixed costs. Because if I take the same amount and divide it by a larger number, it's going to get smaller. So it's really important to understand what happens to unit costs as a number of units produced increases? The unit cost looks like it's going down because I'm taking the same fixed costs and dividing it by more units. Okay, so that's really important to understand. We're just going to, because they're asking us to do it to only 2 decimal places. There we go. So this is what a flexible budget looks like. Key is the fact that the fixed overhead in a flexible budget stays exactly the same no matter what is happening to the level of activity. Only variable costs in total change. Per unit doesn't change at all.